If you are watching this video right now, that means you have reached the day 3 of my free training class. So that means you are about to learn more important things, because this video is going to contain a lot of good information that you need as a trader. Day 2 was success, day 1 was a success. So shout out to you guys who watched it. So guys, we are going to do 3 topics on technical analysis, understanding charts, understanding candlestick, basic chart patterns, fundamental analysis, and that are few things that you need as a trader. Now remember, your job as a trader is to know where the market is going up or down, so you can take advantage and buy and sell, buy or sell, whichever the case may be. So this technical analysis and fundamental analysis is going to show you how to buy, when to sell, and other things. Now, yeah, so I guess you know my name already, but just in case you don't know my name, I am Isaac Noel, and let's go into today's topic. Now, first question is, what is technical analysis? Technical analysis is simply the process by which we sit down, analyze the market based on past history. Yeah, it's a thing of like probability, just like those who know mathematics, it's a thing of probability. We will use past, we'll use past results like the previous charts and other things to predict the future, so that we can know when to buy and when to sell. After knowing when to buy and when to sell, then that's when we can now go to MetaTrader 5 or 4, any of this, and place a buy or sell. And we know how to do all of that. So I'm going to show you guys more on this. So the first topic here we have is bullish and bearish candle. Now, like I said one time, that you will never get tired of hearing bulls and bears once it comes to Forex. Bullish candle means buying candle. Anytime you see the markets going up or you see a buying candle, a candle is facing up, that means it is a bullish candle. Once you see a bearish candle, that means it's going down. Any candle that is facing down, it is a bearish candle. Yeah, that is it about bulls and bears. Just up and down, that is what it means. But in trading, we'll call it bulls and bears. Bullish and bearish candle, that is it. So now the next thing we have on our list here is basic chart patterns. Basic chart patterns, the first thing we have is support and resistance. Now, remember from the first time I said support is the highest level which the market have gone to, and from the highest level which it has gone to, we are mostly likely to see a sell. That means you want to see it reverse once it has gotten to the highest level, because that's why it is just a thing of up and down. You just know when to go up with it and just know when to go down with it. It's just something like that. So if you hear something like support, that means support means the highest level. Many traders call it other things, but I know of support and resistance. Yeah, and resistance is literally the opposite. Once you hear that the market have gone to the deepest level, you will see that, yeah, that is the resistance, and you are expected to buy from that level. That is it. But there are other things. Sometimes the markets might look as if, yeah, it has gotten to the highest level, but all of a sudden it just keep going up. Maybe there's more to it. But there are other strategies you will know. You have to mix with technical analysis so that you can know if if really it has reached that level and it's about to drop, or it's just trying to fake it for you. So you have to just technical analysis alone is completely it's not just enough for it to be profitable. So yeah, you need technical analysis and you have to mix with other things. Like me, I use technical analysis and SMC. Yeah, that is smart money concept. Sometimes I use ICT too to predict where I'm going to. So resistance is literally the opposite, yeah, from going up, and that's an example. This is an example of support, and this is an example of resistance. Yeah. So that is it about support and resistance. Now let's move next to trend lines. Okay, the next topic on my list is trend lines. Trend lines is not just about trend line. Let's just remove the lines. Let's just talk about trend. Okay, from the word trend, if you see the markets going up to a particular level, that means that is its trend. Yeah. So there's something called bullish trend. Yeah, remember that means buying trend, and bearish trend. Yeah, there's something like that. So there's something called trend line. That is a strategy too. So you mark out the trend lines and all of that. I'm going to show you guys what trend line looks like right now. So let's just go straight to my desktop. Looking at my screen right now, this is the trading view, and this is an example. This is GBP, JPY, and I said I want to show you guys what a trend is. Now, I want to ask you guys this question now. Look at this chart. What are you seeing already? Okay, if you said it is a bullish trend, then you are perfectly right. Yeah, it's a bullish trend. So what are trend lines now? Trend lines are that line that will help you identify a trend completely, because it's very possible that you didn't notice that, yeah, it was bullish. Yeah. So you have to use something like trend line as a beginner, most especially. Like even me to this day, I use trend lines very well too, because it's a strategy of its own too. So you can just click on it. This is it. You can just come to this side if you're using trading view. You can just come here, click it, and you can mark from the lowest point, yeah, to the highest, like this. I'm going to explain why I mark it like that in a bit. So you can see this is an uptrend, yeah, something like this. This is what an uptrend look like, and this line you see here, it's a trend line. You can find it around this side. Yeah, it has trend line, ray, and many other things like that. But for the sake of trend line, yeah, just use trend line. This is what it is. That means this market is completely bearish. Sorry, it is bullish, completely bullish. Yeah. So this is what trend line does to the chart. So now let me look for an example of a bearish trend. Here is another example of this bearish trend. Yeah, before you complain already that you don't understand why I'm saying bulls like bearish and how I'm identifying it, I'm going to show you how to identify it by yourself. So this is an example here. This is a bearish market. So you can see from here to the lowest side. Yeah, this particular place I can't count it because of a reason I'm going to explain after this. So you can see here too, it is, yeah, something like this too. This is a bearish market. This is it. That means you can see that sellers took over. So you as a trader, you should know how to identify it, take your sell position, and just make profit and just get out of the market. That is what is it. That is what this whole thing is all about. Yeah. So let me explain to you guys what this trend thing is all about. Okay, here we go. Just for practical. This is the normal chart, but let me just shift this aside so I can just draw some patterns so you can understand. Now, let me start with the bearish market. The bearish market, to see a bearish market, you need to see something called lower lows. Yeah, lower lows and lower highs. It's something I'm going to show you. Relax. So here you can see that the market is moving down like this, right? This is the lowest low for now. This is the lowest low for now. Then you can see market trying to go back up, right? Then it goes up. Now this particular zone here, this is the lower high. This is lower low, lower high. If the market comes around here and go back up, that means it is not a downtrend. But we want to see the market go below this lower low, right? I hope I'm not confusing you. I want to see the market go below this lower low and break it, then also go back up and create another lower high. Yeah, so breaking it down again like this and something like this. This is what we call a trend. The act of seeing the market breaking the previous low and breaking another low, creating more higher highs, and like that. That is what a trend should always look like. Yeah, so the act of seeing it breaking this previous low, another low, it is high Muslim. This is the downtrend, and that is what a trend should look like. Now, mind you, there are three different type of trends, which I'm going to show you next one. The next one now is bias. This is literally the opposite. We want to see markets go up, right? Now, this is a higher high, right? This is a higher high. Want to see something like a pullback. Yeah, it's just like coming back a little bit, then shooting it back up again. I want to see it break this highest high. Now, this is higher low. You want to see markets go back to this very level again and then come back. So we don't want, for the sake of buying trend, we don't want to see the market break below this If you break below this, that means another structure again. It's another thing again. But we want to see it come around this level and go back, break the previous highest high it once had. Let it break the previous highest high it once had. That is what we want to see always onto buyers, right? And also break it and come back in the name of retracement or pullback, anyone you want to call it. And also, we don't want to see it come below this place here. So in this level, we can now see the market go back up and break the highest high. That is what a trend should look like. Yeah. But what if you begin to see something like this higher high? Yeah, instead of coming down here, it now breaks, go back, break above this one, and start acting little weird, like it's not just normal. You begin to see stuff like this, you know, something that's not really what I'm telling you about. This kind of market is called a range market, and it happens every time. It happens most times too. It has a period too. Now, it is very advisable for every trader out there to avoid this kind of market. Yeah, once you see it not breaking once you see it not breaking lower lows and lower highs, and it's giving some negative kind of vibe, it's advisable to avoid the market because you will lose a lot. A lot of traders used to make this mistake. Once they see stuff like this, they want to they think they can manipulate it and make profit from it. I know that feeling. Yeah, you want to reach that certain level, but let me tell you the truth about being professional as a trader. The fact that you know when to run away as a trader, that's the professionalism. Like that's when that's when you are professional. The fact you can run away from a trade when you see bad market, that is being professional to me. The fact that don't try to force any trade. You have to see all these lower lows and lower highs, and that is how you can also get into particular trade. So let me show you guys a strategy you should practice with the use of trend lines. So number one, let me clear all of this first. Hold on a bit. Remember, right? I said the act of breaking lower lows, right, and lower highs, it is called a trend, right? So what if you are just coming and you see the market has already moved this particular level like this already? What do you do as a trader? Since you know it is a kind of trend, this is a trend, you want to join the trend. Because like they said, the trend is your friend. Just like the police said, the police is your friend, which I don't believe. But this is what you do. You use the trend line, you mark out the highest high, right? And also the lowest low, like this. You mark stuffs like this. So in this place, using only the trend line is not just enough. Yeah, using just the trend line to just enter a trade is not enough, because you see that buy and sell button, it is a very powerful button. You don't just joke with it. So here's what you do. What you want to see is, since the market is all about going up and down, you want to go down with the market. Now, rule number one, don't say you want to follow the buy. Don't say it. Try to follow the trend. If you follow the trend, you will really know that the trend is your friend. Yeah, so what you want to see now is, you want to see the market go up and meet something called order block around this very level here. And also, once we get to that level and we confirm that it cannot break above this trend line, then we want to start placing our own sell around here so that we can make money also and follow it to the downside. And that is where we place our sell around this level. But the question is, how do you know that the market is turning around here? It's one thing. Now let me introduce a tool called Fibonacci retracement. Yeah, in the Fibonacci retracement, you can find it on your MetaTrader 4 or 5, anywhere, or TradingView. So now let me just look for Fibonacci. It should be around this place here. I'm not really sure. I'm not too used to TradingView though. Yeah, this is Fibonacci retracement. So in Fibonacci retracement, you can map out from the highest point of the market, right, to the lowest. Let me delete this first. Okay, because remember, we want to see the market, right? We want to follow the market down back. So, like I said, you use Fibonacci to map from the top to the lowest point of it. So, mostly, the one I'm used to, they said that at point 50 of the Fibonacci retracement, I hope you can see it now very clear. At point 50, the market tends to, reverse very well around that side. So now you are combining Fibonacci retracement and trend line so you can enter a single trade. Now what happens here now is this point at this point of 50, you use your rectangle, and mark it out. This is point 50, you mark it out, and all you have to do now is wait. You have to wait for your setup. Like I've said it before, you have to wait for your setup every time. So you wait for your setup, and let's say the markets come back around and also enter that side. Where is this part of it? Okay, you see the markets come back around because you have to wait for it. You might, just play with your mind here, and somehow it's going to get into this level. Once it gets into this level, then we want to also sell around this place. So that is something about, the whole Fibonacci stop and trend line. But there's also something. If you are professional enough, you will know that entering from this very level here is not just safe somehow. You need to use something like double top and double bottom. It's something I'm going to teach also in future too. Yeah, double top and double bottom is for confirmation of when you're going to enter the trade or not. Yeah, there's something called double top and double bottom. It's somehow like support and resistance. Support can be like this. Remember, I said it's the highest point of the market. So where is this part? Is the highest point. You can go like this. Then we want to see the markets come back down like this. Then remember, this is support already. And this is support already. So the market's coming back up like this. Sorry, the market coming back up around this side like this, and also dropping. So you can see this is the highest high, and also this is another high. So you can see something like this. This is called double top. Obviously, this is called double top, and the reverse is the case for sellers. You can see something like this. Yeah, and also this is called, you know a double bottom. It's double top and double bottom. That is what it's called. For just something to remind you, you can see this is like an W shape and this is like an M shape. Yeah, you can use that to remember. So okay, let's remove all of that. So you can see that if you are a particular kind of professional trader, you realize that you might be waiting for something like that in this very level. Once the market gets to this place, once you see the double top and the double bottom or double top in this particular level, just know that yes, three strategies already are telling you to sell. So you have to sell without even thinking twice. Yeah, and it's not just only double top and double bottom. There's also something called triple top. There's something called head and shoulders. And head and shoulders is just like head and shoulders. Let me show you an example. Let me show what it looks like. You can see markets go up like this, and like this, this, and this. So this is obviously shoulder, first shoulder, second shoulder, and head. That is what it looks like. So you're looking at patterns like this in markets to confirm your trade is something you should do too. Yeah. So seeing something like that, that is something you should try. So let me say it again now. The rule of this market is, first of all, you want to see a trend, right? Now the next rule is you want to follow the trend. You can jot this down. Rule number one, you want to see a trend. Rule number two, you want to follow the trend. Rule number three, you want to use the trend lines to mark out from the top of the trend you saw to what it is currently, and you want to mark the lowest point too, and to the lowest, you want to mark the lower swing lows too also. Rule number three is you want to use a tool called Fibonacci retracement. Yeah, This is it from here. I think this is it. You want to use a tool called Fibonacci retracement, map it from the top of the chart to the lowest point. You want to also map out point 0.50 by this side. You always want to map it out because that's what is important. Then you want to see market pull back to this very place like this. You want to see market go to that side inside the point 50 so you can take in your sell trade to the lowest side. So once you realize that the market has gotten to that side, then you can now decide to place in your trades. That is the rule of this. I hope you wrote it down and make sure you study it. Once you are practicing, follow the rules. And if any of this does not hit complete your rule, don't open any single trade. Okay, yeah, now that is it about technical analysis. Let us now move on to fundamental analysis too. Fundamental analysis too is just like majorly the life events, what happens in real life. Yeah, remember Forex is about currencies, like what happened in USD, in USA, sorry, might affect what we see on charts too. So there's a way we also see it and we make money from it. It's what I'm about to explain to you. So you see something like news, there's something called news. Yeah, there's something called news. There's something called NFP. It happens every month in the United States. I've never stayed to watch news for the United States before, but it affects the charts. Like you can see the markets move in a very high impact because of a speech that somebody is about to make. Yeah. So there's some kind of powerful speech, there's some kind of news that affects it because it is from the United States. Yeah. And also something like GBP too, that is from UK. Yeah. If anything happens, it also affects the market. Let me just give you a clear example. Like during the COVID-19 era, the market was completely moved like very well because all major banks shut down and a lot of things were not too moving well. Things were not there were not too much activities, and that was one of the best times to trade. Like really, really one of the best times to trade. But then I've not started trading. I'm just 4 years in the market, and it was about 5 years ago. So you see, I just said it. So let me talk about what NFP look like. If you look closely, look at this whole chart or look at this big candlestick to the upside. It was affected by NFP. Yeah, so there will be something like high impact, there's medium impact, and many more. So NFP is what caused this big spike to the upside. That is what NFP does sometimes. So you need to be mindful too. But the thing is, how do you know when NFP is about to happen? Yeah, because let's not take you unaware. That is where this guy come into play, called Forex Factory. You can just go to forexfactory.com and you can see it. Let me show you what it is. Yeah, so this is on Monday. This is what's going to happen. This is a calendar for Forex traders. Yeah. So you can see that N CNY. I don't know which currency is that though. They have new loan. It's something that happens in their country. I don't really know. I think it's Chinese yen, but so you can see that they have this color here. This means medium impact, and this is euro, Italian trade balance. So they have just normal impact. It's called sorry, it's even a low impact, and I think this is medium impact. Yeah, so this is low impact, and this is medium impact. So let's move on to the next day. You can now click on next like this, and it's going to show you more. Very good. Now as you can see here, now this is AUD USD, this is Australian dollar. As you can see, it has something like cash rate, and this is high impact. So that high impact expected. So what is saying that if you're trading anything, like let's say you're trading AUD USD, anything that involves AUD, you might expect a high impact around 5:30 a.m. if you are trading it. You might expect a high impact. So that is it. And look at this is also USD, and there's high impact also expected because it's something called CPI. These are things that happen in their country. It happens in Australia, it happens in United States, but since you are trading the pairs here, it's going to affect us too. This can be dangerous and this can bless you. You know what I'm saying? So that is it about it. So you can just go down, look for the Forex factory, and also, you know, just set it up to once you see this yellow, it means low impact. If you see the orange, it means medium impact. If you see the red, it means high impact expected. You understand? So that is it about um impact. The next thing on my watch list here is risk management basics. Yeah, risk management is basically, the way you manage your risk, the way you take trade, how you set in your stop loss, your take profit, and how you manage your trade. Now that is what risk management is. So why most beginners lose money? Like, bro, it's because of greed and all of that. Greed can cost you a lot of things. You want to put 0.01 and you want to make a kind of certain amount of money from the market with why your stop loss is low. That is a very bad risk management. That is it about risk management. So you need to know how to set in your take profit and stop loss. Yeah, so that's how to that's one thing about risk management. Okay, if you finally made it to this very end, that means you have come to the end of the 3 days free beginners class for traders. Yeah. So I just want to say thank you for watching to the very end, and I hope you are a better trader, and I hope this helped you to kick off your trading journey. So guys, for my advanced class, it's just going to cost you $50, to start trading with advanced things. Like, that is where you will learn stuff like SMC, you will learn stuff like technical analysis to the fullest, how to combine it with other strategies too. You will learn stuff. That is where basically where the money is. Yeah, basically that's where the money is, the pro class. Yeah. And I said it's going to cost you just $50, to get into it, and you learn more about everything about trading and basically most things you need as advanced person. And also, I also have a signal group where I drop signal for those who don't know how to trade, or if you want to be learning and also be earning. That is it. You can also join my signal group, which is going to be less cheaper, which is about $20 or something like that. So you join my signal group too and use XM to trade, and you receive these signals also. But what happens if you don't want any of this, you don't want to trade, or you don't have that time? You can also use the trading robot tool that I have. This robot will help you trade because it has been trading for a very long time and has made so much profit that I can't. I'm even surprised to even say it. Yeah. So it has made so much profit. So if you are interested in that kind of robot too, that robot is $100. Yeah, my advanced class is $50. My signal group is $20, and the robot is $100. So guys, thank you for watching. I hope you found everything meaningful. I hope you understand, and I wish you guys all the blues. Yeah, I don't wish anybody to have the constant red and even give up on forex. So you just have to master your psychology and master your strategy too. With just these two things, you are good to go. Trading will work well for you. So guys, I remain as ignorant, and that is the end of this beginners class something. It was nice having you guys around. So see you guys.